There's a lot coming at investors. The war in Iran, we keep trying to figure out when this might wrap up. That is the big question. How are you kind of factoring that in? Are you not yet? The energy market disruption, it feels like things are cooled down, yet we are still way up from the start of the year when you look at the prices of oil. So how do you assess all of this when you think about investment management?
So thanks for having me.
Yeah.
And you are spot on. I think right now, one of the taglines I go by when I talk to our clients is, in the short term, markets follow headlines, but in the long term, markets follow corporate earnings. And you have to separate the two. So in the short term, we're going to continue to see this volatility, as we've talked about. And that is just a reality of what you're seeing from an S&P, NASDAQ standpoint, that you're saying, like, today was down, it was up. But in the long term, the reason why I still feel bullish and confident on equity markets and the U.S. as a whole is corporate earnings is still predicting 13 to 15% overall earnings this year, right, in 26. And so what you want to anchor yourselves to from a long-term standpoint with our clients is really focusing on that. Now, you've talked about it. There is going to be a more focused on value over growth. And so you're seeing that in the tech sector that you're talking about right now. So the Mag 7, I consider that a repricing opportunity.
And you are calling or thinking about 2026 as kind of the year of value, right?
Year value. Year of value, right? Because you're right. The market is repricing some things right now. So that's why you're saying it's the year of value. So when you take a look at use tech as an example. We talked about the Mag 7. That's getting repriced a little bit, as we're going to see this year, but it's the forgotten 493, right? The widening out of that sector. That's going to be where the value opportunity lies, right? If you think about that, if you take a look at I say 493 outside of the Mag 7, last year their earnings were something like 6%, and they're predicting this year in 26 closer to 15%. So if you take a look, the Mag 7 will come down slightly to the 14-15% range, and the widening of that sector really says there's value within there that we should be tapping into.
So let's talk a little bit about the consumer and the idea that the consumer powers this economy, and if a consumer is paying more for gas, that might cause the consumer to pay less for other things. Since January 14th, gas prices are up more than $1. Or exactly $1, roughly $2.77 back on January 14th, $3.71, so 33% higher right now. How does that affect earnings if consumers are feeling strapped?
So corporate earnings slightly different from how the individual is feeling, right? And so
but I mean,
completely agree with you.
And bear with me here, but there is this connection where if a company has to pull back from advertising as a result of earning less revenue, then that affects, a Mag 7 company because their top line is dependent on advertising.
Yeah, I think over time. So I'd say I always tell it's a tale of two cities. The story of the individual is slightly quite different from a corporate standpoint. And you're absolutely right. Gas prices are higher. We still have not resolved tariffs as we think about it, right? We're also looking for what will the Fed do as it relates to rate cuts that are coming up. And AI, we can't forget that and what that means to the labor market. So these are real things that impact the individual. And so when you think about that, the importance of that is the alliance around what sectors to focus on and where the rebalancing comes in, right? Because there are going to be sectors that are very much more impacted by oil or AI or specifically tariffs. And that's why active management is where we're really leaning into and figuring out what sectors you need to pivot to in this volatile market that we're experiencing in the short term. But again, I try to anchor us back on the corporate earnings piece and the importance of equity markets right now and what that means.
I get what you're saying, and I get what you're saying when it comes to earnings growth. I think about top line growth, and I also think about pressure on margins, especially amid higher energy prices. And so how does that play out if companies potentially are feeling pressured? We still don't know. Again, tariffs are once again an unknown. I do think about pressure on margins, and then how do they make it up? And if they're able to use AI to do something, do they let go of workers, or do they not hire as workers leaves? And then that plays out into the economy, and that ultimately, does the economy become the market?
Yeah, no, you're spot on. So I think what I'd say to that takes a longer time to show up in the economy overall. But what you just pointed to, the AI, the labor markets, that's what we're seeing, the unemployment rate. In the last unemployment report that we saw, while we were higher than estimate, it was concentrated in healthcare. It was very concentrated, right? So it wasn't a widening of a labor market, and that makes you dangerously nervous because that really means it's only healthcare that really tipped over, the job report, the last one that we received. So Labor markets absolutely would be impacted by AI and, let's say, this inflationary thing called what's happening with oil prices, and then also potential the unresolved of tariffs at this point. So the small business owner and the individual are absolutely feeling differently right now.
Racquel, is there any conversation within your world and with your team over at HSBC where there is a thinking that even if we ended this U.S. war in Iran tomorrow, that there's still a region that has been impacted severely and a country that has not liked the U.S. for decades, and that somehow lingers and creates some volatility potentially for us going forward, whether it's in the energy markets or just our life in
so I
general?
think as we all look at this, there's always the geopolitical piece of this that would impact lots of decisions, right?
Yeah.
And so we always have to have an eye on what's happening outside of the country, and specifically from a geopolitical standpoint. And we would say what keeps people up at night, it's that unknown, right? And so whether you say it ends tomorrow or it may not, right? I mean, that's also a very big unknown. So for that reason, you have to figure out how do you get oil prices back under control, right? So you have to assume if it doesn't end tomorrow, what does that really mean? And what does that mean for the price at the gas tank as we think about individuals? And what you're seeing in that price increase, it happened in such a short period of time too. It's the shocker, right, that you weren't planning for it, and it went up within a week, up 20%, 30%, and so that's a lot for an individual consumer to take on.
And maybe
right
we'll find out more on Wednesday, hopefully. But
Exactly.
it's a shock that the Fed maybe didn't necessarily see company.
And then you got to watch inflation. That's the important thing. The Fed's going to come in and make a decision, and it's a hard decision right now as you're taking a look at what's happening from a market standpoint. As you just said, pretty resilient, the markets, but at the same time, individuals are feeling pain, right? So the question is, does the Fed make cuts? I think, right now, it will be important to see what happens on Wednesday.
I can't imagine the Fed cutting rates. I don't think anybody at this point.
I don't think anyone's anticipating that, but I think people are hopeful for that. But I think for us at HSBC, we're actually saying no cuts this year, quite honestly. We're taking a very extreme view on this
I
one.
like that. I like this.
Or Anna Wong has talked about four rate cuts this year.
4 cuts, yeah, so 100 basis points.
So
maybe it's somewhere in the middle.
It's a wide range
and
right
as
now.
of last week, traders were not even pricing in 1. They were pricing in 24 basis points, so not even 1.
Yeah,
As of
right?
last week, yeah.
It's just.
But you also have a new Fed chair too, so there's a lot of differences.
Not yet.
Maybe.
Well, very soon.
Talk
Very
about
soon.
unknowns.
Very soon.
I have learned.
I don't know if you were around on Friday and you saw that press conference.
Yes, correct. So all those factors then says we can't always predict what's going to take place here, but the Fed plays an important role, right, to answer that question.
Yeah.
Yeah.